Just at Ameriprise Financials. Paul Schatz is the president of Heritage Capital. And David, why don't we start out talking a little bit about what you expect from the jobs number this week? That's going to be key for how the markets are sizing things up.
Yeah, it's going to be absolutely key. If you look at the average of the last 3 months, we created 130,000 jobs, a significant downshifting from how we ended the year. So the street's looking for 200. If we get it, I think that will be an indication that maybe we can finally put this bad weather headwind behind us. And there are some private estimates that suggest it could be as high as 225. If we get that, I think the stock market would like it quite a bit and maybe reinforce the view that the economy's better days are ahead of it.
Hey, Paul, what do you think? We've been trying to figure out what happened with the weather, if that was a huge impact on what we'd seen on jobs up to this point. You think we'll get a big, strong number this time?
Now, I'm not an economist, and I always think picking the job number is almost like a coin flip, but I would say that it comes in higher than it's been over the last couple of months. It would be great in all our businesses to be able to blame the weather on every single issue. Right. I think the weather's behind us. I think the jobs report will come in a little better, but I don't think the market really cares about the jobs report. The Fed's going to taper. We're going to be done, and we're going to look on to higher rates sometime, Q2 or Q3 next year, unfortunately.
So what do you think the market is keying off right now?
I think, listen, the market's been in a trading range now for over a month. I think the market's really, the bulls and the bears are in their tug of war, have fought to a draw. And I think you probably have another couple of weeks to a month or so of this sideways activity. I do think you can buy weakness and sell strength in the short term. I think once you get into the middle earnings season, we'll get a better run to the upside.
David, you agree with that? Because we're all the way in, a quarter in on this, and things have not developed as a lot of people had anticipated or expected when we started January.
Yeah, I actually have a slightly different view. I think if you think about just how bad the first quarter was, both in terms of growth and in earnings growth, which is now expected to be flat to maybe down, I think it was something of a Pyrrhic victory or a symbolic victory for the bulls. And if we could have held
just
in
by
basically
holding on
flat
to this, because as things have been so bad, you're surprised that things haven't traded weaker?
Yeah, exactly. And so, but I think in order for stocks to move higher and break out of this trading range, the data has to firm. If you think about earnings expectations for the rest of this year, we now need to see double-digit earnings growth in the remaining 3 quarters of the year. And so economic activity is going to be the key to that story. But I think right now the bull side of the argument has kind of held in there pretty well, done a rope-a-dope, if you will, in the first quarter, and maybe poised now to move better. But it's all going to depend on the data and just how firm it is.
So, David, where would you expect the stock markets to end the year?
Well, I think it's going to move higher in the interim, that is, between now and maybe a Labor Day or a little bit beyond that. But I think at that point, the market will begin to look forward to that first rate hike. And if you believe what Janet Yellen had to say the other day, that it could be 6 months after the end of tapering, that's still before the market anticipates it, somewhere around the middle of next year. And I think if that turns out to be the case, and the market brings that forward, that we're going to see a correction in the fourth quarter or thereabouts, and maybe the year ends flat for the S&P 500. But I think between now and then we move higher.
So even if the economy turns around, it means that the Fed's going to have to act sooner. So you don't see a lot of upside no matter what happens. Either the economy's bad, or if the economy's good, the Fed's going to move sooner.
Well, I think there's a correction out there, but I don't think it means the end of the bull market by any means. I think there's a wobble there, and maybe we pull back to a certain extent. But I think the economy would be on firm footing and allow the market to continue to move higher eventually. But I think we have to get through this period of time where, rates start to rise. And I think when that happens, you're going to see a lot of adjusting in portfolios, and I think some of the air comes out of the market at that point.
Paul, how about you? What do you think stocks will wind up doing for the year?
We thought coming into the year, we thought it was going to be a digestion kind of year like 1992, 2004, 2005, where we tread water for most of the year, and then we have these kind of sharply higher periods temporarily. I think we're going to end the year higher on balance. I think the bull market lives on into probably early 15, mid 15. I don't see any signs yet, not a single sign that the bull market is ending, not one single sign, contrary to what everyone else believes. Listen, if the market's going to correct this year, I think it's going to do it before the Fed raises rates. We all know the rate hikes are coming. We can disagree all we want, but I think the market will correct before that. And let's remember, the 10-year has almost doubled from its lows, so rates have gone higher, just not at the short end of the curve yet.
All right, gentlemen, I want to thank you both for your time today. David and Paul, great seeing you both.
Thanks.
Thank you.
Okay, coming up, setting up the Final Four. We're going to check out the matchups and what's left for everyone's brackets. Also, we got a little bit of Hollywood news because this weekend Noah ruled the box office, raking in $44 million.